The following is a presentation of TFNN. It is now time for the Tiger Technician Hour with your host, Basil Chapman. Call now, toll free at 1-877-927-6648. Internationally at 727-445-1044. Now, Basil Chapman.
Hi everyone, Basil Chapman, Tiger Technicians Hour, the 14th day of January 2014. Thank you, Steve, for 2 great hours. We have wonderful programming going all the way through until 6 o'clock this evening, and then it gets repeated, archived. Please just stay tuned, and I'm sure that many of you have your favorite hosts that you love to listen to, and that's just wonderful here at TFNN. We love having you. And for those listening right now, the call-in number is 877-927-6648. Let's just go straight to the numbers. Dow is up 48 points after that huge move, 180-point decline yesterday. It's at 16,304. The S&P is up. Now, this is very interesting. The Dow's up 0.28%. The S&P is up 0.62% at 1830.50. And this is going to be even more interesting because the comp index is up 45 at 41.58. Let me just jump over here. I haven't updated it, but I got the price, comp index. So I haven't updated the notes. Oh, boy, how about that? It's up 1.11%. Very nice. Leg D in the monthly. And leg, let me just double check. I'm moving things a little quickly here. So that's your D right there. That is 75, 37, 82. And that is your E right there being challenged as we speak. So in leg E, could be a peak E, but so far it's called the leg E. In the composite index, that's the very broad NASDAQ composite index. And the daily chart, let me just have a look here. So I'll do it from the bottom because you want to know how to do the Chapman wave. Go to the low bar, most obvious left side low bar of the 9th of October at 36.50. Merely count each successively. Higher a peak. A little drink there to get the throat lubricated. A, B, C, D. And I went to an E. Okay, there it is. The composite made a peak D after that first move. Made it at on the 18th of November at 39.94. Pulls back for 2 days. Goes under the 9 EMA. Then starts A to B. Holds beautifully. That's why it's not E to F but A to B. Could have been E to F because it had such a sharp decline afterwards, but the price held, and I love that. So looking at this, continuing, it goes A, B, C, D, and then it goes to an E where everybody made that E on the 9th of January. Some of them made the peak E at on the 31st of December and pulls back quite sharply yesterday. Today has an inside bar. This is going to be very interesting because have a look at this. If you go to the NQH14, the move that we've just had, as bad as yesterday was, so far this is an inside day, and the NQ, that's the March E-mini contract for the NAS 100, is up 41.75, up at 1.18%, up into the trend line resistance, fractionally above it. That's the daily. But I don't want to do the weekly just yet because we don't know where the weekly is. But most importantly, if you look at the 120-minute chart, look at that rebound. The rotational aspect of this market just stuns me every time. I went through, and I know many other people did, over the weekend they went through hundreds of charts. One person said I must have gone through 1,000 charts. I don't know how many I went through, but I took every moment I could to go through these different charts. And it's the weekly charts and monthly charts that said, we are extended. The daily chart is going to give the shorter-term sell signal. How the weekly and monthly pullback in January is going to be so important because if look at this. Everything says that the market today should have had a bounce And even though the Dow's only up 40, it's still pretty good action, and it's really good action in the S&P, and very good action in the IBB. And I'm one of those people that, regardless of what position I have, I absolutely do my very, very, very best to look at it as objectively as possible. Even if we were long and I had a short position, or short and had a long position, I want to look at that, and I want to look at it as objectively as possible. And this NQ says, very good rebound. The closing price is going to be really important. But if this takes out the high of the 13th at noon yesterday, about 24 hours ago, takes out the high of 35.66.50, closes above that, that is really impressive. And I'll tell you why. Look at Alcoa. We had Alcoa. We got stopped out for a small gain. And what happened is bounced back to 1037, stopped dead at the 9-period exponential moving average. I have to do an alternate wave count to say it could be an E and an F. It didn't look like it before, but I'm putting it in because, as I say, I want the most important thing about the Chapman wave methodology is to always look at the left side high bar or low bar and make a determination to feel comfortable with the lettering that you've got, because that's going to determine how you go on. That's number one. Number two is look at X. So you got the aluminum bouncing, and you've got steel up 1.11, up 3.97%. And holding the 9-period in the weekly chart, which looked terrible at the close yesterday because it looked very much like it would pull back. But the MACD in the weekly was strong. The stochastic in the MACD in the monthly was still strong. It was that daily chart that went to a sell. It went to a sell mode. So it could turn around and reignite as a buy signal. I don't know. What I'm saying is that I'm always impressed in this market for the last, at least from the summer of, starting in the summer of 2009, but absolutely the summer of 2010, how the rotations constantly prop up weak sectors because there are a couple of good stocks within it, and then push higher. For instance, the XLF this morning, I almost went short with the FAZ. And then I thought, don't do that just yet. You've got to wait for the day to conclude. You've got a couple of the financials doing okay, and a number are not. And it was a very bad and ugly session yesterday, cross negative into a sell mode. You've got to see how at 21.79 today, up only 8 cents. If it's able to cross 21.88, somewhere around there, if it crosses that level, that is positive, and that's going to help the weekly chart. Weekly chart has only just given a signal that says rising wedge formation, expect a cup formation to form if there is further weakness into Friday of this week. So I'm looking at that. Question in the den, and Danny, I want to do, I haven't finished the numbers. The gold is down 30 cents, holding very well. Silver's up 14 cents at 20.54. High-grade copper is down $1.95. So now let's go to high-grade copper. I'm looking at the continuous contract for now. Nice bounce yesterday. Oh, save the bell the last 2 days because today's weak again. I think copper is it's gone to that upper, let's put that B/E. It's actually an E/B in the weekly chart, E/B. So what we've got, and now I've got something, if I have a chance, I'll do it. It's in my CD introducing the Chapman wave methodology. It talks about renaming, about the alternative wave count. And it's so important in the Chapman wave. You've got to understand that under the umbrella of the name the Chapman wave, it's trademarked, you've got to understand that I've tried to, there is no other technique, one technique, that has as an umbrella all these different components to try to gauge every single move to the upside and assess every single move to the downside in all time frames. And that's basically what my work does. And the copper in the daily had a very clear peak E with a down arrow. Sell mode is in place. It can change, but a sell mode implies there's a good chance of a deeper correction unfolding. And it always depends on how you pierce the most significant left side low bar. That will be in high-grade copper, the continuous contract. That'll be the 3.2750 area. Right now, copper's at 3.32. I'll go to that contract, HGH 3.14 is usually pretty close. 3.32, okay. So 3.32, how it pierces the left, so first of all, how it pierces the low of a couple of days ago, 3.28, but it's really how does it pierce the 3.2750 level? It does that. Copper weekly will say, I've gone to the top, I'm now going to go to the middle of this trading band, and that will take me down to the low 20s. So I'm watching it really closely. So the answer to the question is, look at copper, please. Copper is, let me put the down arrow. I have to put that in because once you've got everything under the 9-period moving average, stochastic breaking down, MACD down, have to go with a down arrow. Even if very soon after that you make a new high, I have to then assess whether it's a brand new buy mode or it's just it's failed to break to a lower low where the starting point was, in this case down at 3.16 on the 19th of November. Therefore, you could get a residual bout of strength that takes it to a nominal new high. I don't think it's going to do that right here. So I'm looking at that, and the only way I'd become more encouraged about copper and our copper stock that we have in my portfolio is in fact holding quite nicely, but I've raised the stop. I'm not going to play games with this. Is if copper can break 3.3735, the high of the 13th, high of yesterday. It needs to do that, needs to do it very quickly. If it takes, in this long-legged doji, if it takes and closes below the low of yesterday, 3.3145, it can have another down day, but that's it, because a third down day says it's going to test the low. That second down day, if it takes out the low today, of yesterday, is really important because it has to spring back to the candle to the level of 3.34 to be able to negate the downside activity. I'm looking at this market. Bouts of buying have come in. The Dow's now up 75. The S&P's up 14. This is an impressive rebound, a very impressive. There were inklings that there was a possibility of it because I spoke about this in my assessment of the IBB. I haven't finished the thing. Bonds are down 13 at 130.23. Crude oil is about unchanged, and dollar is up a fraction. So now let's go back. You see, the IBB, everything I did, all the work I did, said in the Chapman wave, that was just a peak C, and that there should be a peak D to come. But it was really an ugly bar, and there were a number of biotech, very big cap biotechs that absolutely plummeted. And they made new highs. Some of them made all-time highs and then reversed very sharply. So in this particular instance, we were long the BIIB because I felt very sure that it would make a leg D and that we were in C. What happens, it opens up, makes a new high, and then it plummets down. We took a 1-point profit the day before. We took a 2-point loss yesterday, very like it was only 2 points. And now, instead of going long this morning at the opening, I would have been stopped out because it went a tad under yesterday's low. I look at this. We're going to go to leg D in the BIIB.
You take a hands-on approach to managing your investments, and whether you're bullish or bearish on U.S. Treasuries, the ETFs from Direction Shares are there to help you magnify your perspective. Bull ETFs for a rising market and bear ETFs for a falling market. Direction Shares gives you the tools for both sides of the trade. Discover how we can help at DirectionShares.com today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction Shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction Shares. To obtain a prospectus or summary prospectus, please contact Direction Shares at 800-851-0511. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors employing dynamic strategies. Investors in the fund should understand the consequences of seeking daily investment results, understand the risk of shorting, and intend to actively monitor and manage their investments. Distributor Foresight Fund Services, LLC.
with the launch of Tiger TV. TFNN has brought our programming to the next level. With Tiger TV, you can gain access to each host's charts and computer screens as they host their daily stock program. Whether it's Tom O'Brien, Steve Rhodes, Basil Chapman, David White, Larry Pesavento, Andy Hecht, Victor Jones, or Terrell Martin, you can catch all of our technicians hosting their programs live and archived on Tiger TV for your viewing pleasure 24 hours a day, 7 days a week. If you haven't checked out Tiger TV, then visit TFNN.com and see what you're missing.
TFNN is excited about our new software charting program, The Art of Timing the Trade Charts. In collaboration with Tom O'Brien and using his best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System, David White has programmed an outstanding piece of software that will complement any trader's methodology. Using this first-of-its-kind program, The Art of Timing the Trade Charts allows you to scan thousands of stocks for Fibonacci formation setups, including Gartley's, ABC's, butterflies, and much more. The Art of Timing the Trade Charts is designed to help you when scouring the markets for stocks just beginning to form the trading patterns that many investors spend days, weeks, or even months searching to find. And right now, we're offering licenses available at only $79 a month. We are so confident that you're going to love this new charting software that will even give you a 30-day unconditional money-back guarantee. Don't miss out on this incredible new piece of software. Get your copy of The Art of Timing the Trade Charts today by visiting TFNN.com.
Who says you can't take it with you? TFNN says you can. With your mobile device and TFNN's live radio streams, TFNN has put it all in the palm of your hands. No special apps to download. No subscription fees for live radio or Tiger TV streams. We say you can.
Now let's go over to the dollar, because the dollar is going to be the generator. It is the generator of basically higher dollar, lower market. And what the dollar has done, and this whole uptrend, folks, has just gone sideways. The way it works, folks, is this.
We say you can. The Tiger Financial News Network. Smart investors and professional traders know you can. TFNN.com. Educating investors. Investors, Taz Market Research delivers to its subscribers expert commentary on the analysis of 15 different markets each day. Get this invaluable and timely information through the daily market research videos Taz Market Research produces each day before 9 a.m. The video analysis will include reports on currencies, interest rates, indices, metals, energies, grains, and more. You'll be able to gauge where high profitability setups are in each of the markets. Receive a free 2-week trial subscription to Taz Market Research videos on the front page of TFNN.com. Basil takes your phone calls now. Toll free at 1-877-927-6648. Internationally at 727-445-1044.
Hi, folks. I am actually right at this moment. I just got an email from someone who had a seven bagger in options with Amazon. And I have to congratulate them. It's congratulations, Bob. That's a fantastic move, and I know that you planned the trade extremely well, using a whole bunch of techniques. And I just wanted to show something here on Amazon, trading at 394.50 up 3, having made, is that a peak E? Let me just double check. 405.63, 406. Absolutely. See, when I get a peak E like that with the with a cup formation, that says that the pullback is very important, because if it takes out the left side low of the trough, in this case 397 was the round number high, but 388.42, and closes below it, that says you can get a one-to-one extension to the downside. So far, there's just a high-level consolidation peak E in the daily, and that came about because there was a peak D in the 120-minute chart. There was one from the low bar of December the 13th, the 12th of December, that is, 379.50. It went peak ABC, D, pulls back very sharply, and within 2 days does the same kind of move that we're just looking at in the IBB. Wow. And then it starts a brand new move from the 200-period exponential moving average, and it goes ABCD to the doji at 313.30. That's 1:30 in the afternoon, the 23rd of December. Pulls back, makes that cup formation, and then takes it out for eventually for more than a one-to-one pullback. But within that, it has another ABCD, pulls back, A, B, C, D, pulls back. How many times? That's 1, 2, 3, 4 times with one E, fractionally higher. 4 times you've got your 4 higher peaks. Wow, nice technique. And then it goes to the 200-period moving average, and now it's bouncing again. High-level consolidation, that's all we can call it so far. And even though the MACD is terrible and the stochastic's bad, in the daily, the weekly is holding pretty well. So Amazon so far is having a high-level consolidation. That all changes if and when Amazon closes under 385, trading at 394 right now. Just thought I'd mention that, and I wanted to give Baba kudos there, because that is really something to be able to look 4 months, 3-4 months ahead. Bravo. Now, I want you to do something else. There were 3 things I want you to do. So, where's my notebook? Oops, it's just over here. Okay. The first thing I said was yesterday we were looking at the tremendous move in the IYT, and then the sharp pullback, holding the 9-period moving average for a potential peak D if there's no new high today. That's the iShares Dow Jones Transportation Average Index Fund. Remember what I said? Monthly chart, nothing to look at here. It's slightly above the up channel, very long-term up channel resistance. That's a positive, but nothing to look at here. And I was looking at the relative strength was doing well, and the on-balance volume was concurring with the monthly chart. I said that the weekly chart had slightly lower on-balance volume and relative strength. It's just kind of a heads up, but nothing yet, because this is leg D. Leg D in the weekly, leg D in the monthly, peak D if there's no new high above 134.11. Let me put that in here. And therefore, the rotation that I'm looking at says that there are certain stocks within the sectors that are highly vulnerable. But some of the sectors have been so powerful that money constantly flows to them. We saw that move when I spoke to you earlier, and I said the Dow's only up 40 points, and then it suddenly popped to up 73. Now it's up 68. That is a big leap in minutes. And that the way I have to think of it, if you're looking at a little tidal pool, you get this wash of water. It just keeps coming, wash, wash, no big waves, just a wash, and it keeps covering the beach. Wash, 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 until the tide goes out. You do not see the beach. And that's basically what we're looking at here, that 9-period moving average. That's the line in the sand. A close below it, below 131.74 to the 131.24 next level of support in the transportation iShares changes the scenario. We start coming down, and then you have to watch that weekly chart. But that's the thing right now. Watch out. I'm not yet ready. The volatility index hit the 9-period moving average. It went all the way yesterday down to 11.82. This morning, and the high yesterday was 13.65. Today's high is 12.90, and the low is 12. It's at 12.05 right now. I have to tell you, the buying intensity that keeps coming in is huge. So I'll be right back straight after these messages. A couple of little quick questions I had. I'll be right back. Dow's up 66, S&P's up 13.
With over 3 decades of trading experience, Andy Hecht brings a tremendous amount of knowledge and expertise to each weekly issue of his newsletter, the Technomental Commodity Report. The Technomental Commodity Report gives you Andy's unique technomental analysis of the commodities market, a combination of technicals and fundamental analysis which he has developed and perfected over his many years of trading. The Technomental Commodity Report is only $49 a month, and right now you can get a full month-long trial subscription while paying absolutely nothing. See for yourself the kind of weekly report Andy delivers to his subscribers every Thursday morning. You'll receive specific stock, ETF, and option trades based on Andy's analysis, so no futures account is required. For all the details and to start your month-long free trial to the Technomental Commodity Report, visit TFNN.com today.
If you're an active trader looking for that extra edge when it comes to trading and investments, then now is a great time to get a 2-week free trial to Tom O'Brien's daily market letter, Market Insights. Tom O'Brien's daily newsletter, Market Insights, comes out every market day at around 9:30 a.m. and provides Tom's daily commentary on the broad market, including the Dow, NASDAQ, and S&P, plus specific trade recommendations. There's even an update published most afternoons to keep you informed about the day's market activity. He'll give you the entry price, price target, and stop price of each stock and option trade. With Market Insights, there's nothing left to guessing. For all the details and to get your 2-week free trial to Market Insights started today, visit TFNN.com.
In quiet markets, investors search for new trading opportunities. We'd like to introduce you to a new product that provides opportunities even in flat markets. Nadex, the North American Derivatives Exchange, is a new and innovative Chicago-based exchange registered with the Commodity Futures Trading Commission, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their trading platform. Nadex never charges a fee to use their platform, which even includes real-time charts and full customization capability. Nadex's unique short-term binary options allow traders and investors to capitalize on strategies even when the underlying markets are quiet. Nadex's innovation has allowed them to come up with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's NADEX.com, or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors. Daryl Martin coined the phrase diagnostic trading, and we're happy to announce that his diagnostic box spread analyzer has finally been released. The Diagnostic Box Spread Analyzer helps you easily identify the best box spreads on Nadex in seconds, plus you receive access to the diagnostic deviation levels, as well as step-by-step training videos teaching you how to trade Nadex spreads so you can quickly master the mechanics of this simple yet powerful trading instrument. By pulling live data from the Nadex exchange, the Diagnostic Box Spread Analyzer does all the math for you, calculating risk, reward potential, distance to break even for both outright spreads and spreads used to hedge the underlying market. Visit the front page of TFNN.com today to get your 2-week free trial to Daryl Martin's Diagnostic Box Spread Analyzer and gain access to the valuable information it can provide when trading the Nadex box spreads.
This segment is brought to you by Harmony Gold. For more information, just click the Harmony Gold banner on the front page of TFNN.com.
Hi, folks. We're back, and a very good point was made during the break by one of our astute denners, and that is that Google hasn't yet made a leg D in the Chapman wave. It went to 1147.32 on the 8th. It went to yesterday, it went to 1146.91, just 30 cents, just missed it. Could have been peak C1, C2. However, very strong session right now, even though the technicals are not great at all. The weekly technicals are still really strong, and the monthly technicals are very good. At 97% in the stochastic, 96% in the weekly. Whoa, that's good. So this could be an extension right here. I would not be surprised to see Google make that leg D, and that would say that between 1150.30 to about 1153 could be where it makes a peak D and turns around, somewhere around there, just a little bit above. And we're going to watch this real closely. I certainly am. And thank you for that information. Did make a peak. Isn't that interesting? I called it a phantom peak to a peak D there at 11:47.51 in the 120-minute chart. And we'll see if it gets reignited. There's nothing wrong with that because it fitted perfectly for the decline. Isn't that just fascinating? So now let's just go back to our story. In my work, I'm looking at a number of factors. Don't forget, folks, Thursday right through Monday, I believe it is. I think it's Monday. It might be a little later. But at least Monday of this week, you've got the New England Order Show. it's not just an auto show. I absolutely do not go to it as an auto show. I go to it all these years as a socio-economic foreteller. It tells me so much about what could happen in both the economy and in the auto industry. Very important industry, the auto industry, obviously. So you get a chance. Now, I wanted to just do something, a question in the den, very appropriate. I wanted to do that here. Why? Because this move in gold has been so steadfast throughout the turmoil that we've seen in the general market that I do not want to just ignore gold and say, you know what, counter trend rally, big deal, even though we are playing it and there's a one position we got that's up really nicely in percentage terms. That's not good enough for me. What I want you to do is to look at it and say, how tradable is it? Well, let's see, 118.52, 118.44. So that's A, B, C, D. There it is. So we'll do this right here. And we'll go A. And then we can do an analysis. One of the reasons why I did not want to do any adding today, I wanted to see how gold reacts and responds, because my shorter-term indicators were saying that gold was a little bit overbought and that the 120-minute chart was about to make leg D, and then it turned out to be a peak D. If there is no new high above 121.06 on the GLD, but it's only leg B in the leg B still today. It's leg B in the daily chart, and the MACD and stochastic are strong. It's the weekly chart that the stochastic and MACD always have. When the daily chart has a very strong pullback, it very often impacts the weekly quite poorly. It just takes a while for the technicals and the weekly to improve. Sometimes you can see the monthly improve before the weekly. So let me just do this. I wanted to do the GLD, but the question is on gold itself. Now I'm going to go to gold, but if you don't mind, because the price is very, very, just slightly different, I'm going to go to the continuous contract. I'm going to get rid of the 120-minute chart. I want to do the larger context. And I want to show the monthly chart. The monthly chart has made a beautiful arch formation. Left side, right side price symmetry says that, yes, there should be a rally now, but sometime in, it could be May, if this left side, right side parallel time price match works out, or it could be if it's lower down and takes out the 1084 level, it could go much lower. But let's go one step at a time. There should be a bounce here that takes the H pattern just like it did before at the very beginning in the September high of, I'll give you the price, but it gets smoothed out, so that's really not the issue. Now it's 1950.20. It used to be 1949.70, so it gets smoothed out. But it pulled back, made a trough A and then an arch formation, fractionally lower trough B, and then another arch formation, which went just above the previous high, the high of February of 2012. That was 1810.30, and it went where to? It went to 1806, slightly lower. So that H pattern became an M pattern. The Chapman wave methodology, what we look for, that's the renaming. I won't talk about that right this very moment. I just want to talk about the H formation, just for those of you who are new to my work. So we'll go to chapter 17 quickly. Chapter 17. So this is the pattern that we're looking for. How you keep coming down in an H. This one happens at the top, but eventually that H can turn into an M pattern. That's what I wanted to show. And there, it's a lowercase h that goes to a lowercase m. Soft arch formation. And then what happens, it takes out the left side low. In this case, it took it out, and I said, if it takes it out, it can be a 1-to-1 to the downside. Well, eventually we made that low of, was it May? Of June of 2013. That was at 11.79. It's a different price. There it's 11.79.40 because it gets smoothed out. And another arch formation has taken place with another fractional low. Hey, make sure that's right. 11.79.90. 11 81.40. That's not an E. I should not have done that. That was a mistake. That is a successful test so far. And that says you could get a bounce, and that bounce could turn out to be quite strong. But a number of factors have to happen because it's a monthly chart. And that means the daily has to lead the weekly. And eventually there's a test of the high of 1434. Now, I don't like to go 2 steps beyond. I like to go 1 step at a time. And 1 step says 1320 is the 9-period exponential moving average. That's 80 points away from here. That's a lot of points. So I'm watching this very closely, and it says it could be a bounce. There should be a bounce, it says, as well. There doesn't have to be, but there should be a bounce. That's saying, looking at the monthly chart, there is enough evidence to say that if this week there isn't a sharp pullback, say it's at 1243, under 1220, there's a good chance that the monthly chart over the next week will start to improve a little bit more, and we'll have to have the weekly chart, which is going to be really important. It's struggling at the 9-period moving average. It needs to close Friday afternoon. I don't know if it can do that, but Friday afternoon, the gold contract, this is the continuous contract. I'll give you the price of the actual tradable contract soon. But it needs to close at 1248 or higher. That's not a big deal. It's only 6 points up. But it needs to close above that by Friday afternoon. If it does that, that's the first sign of strength in the weekly chart, since for 1 week it closed above the 9-period moving average, the week of the 25th of October. But believe me, it doesn't like to do that. From the down move, the week of the 13th of September, that was the only time that it closed above it. It actually did fractionally last week, but it was so fractionally that, all right, I'm going to say it did close above, but it was only fractionally. So now let's go to the daily chart. And the daily chart says, very good action. You've moved up with the stochastic and the MACD. That's a positive. It says that the stochastic at 86% is good. I would have liked to see the on-balance volume move even higher, and it hasn't. I would have liked to have seen the relative strength move above 50%, and it's just barely right now above 50%. Let me tell you exactly what it is. Relative strength is at 56.77. Okay, it was a little faded. It is above 50%. I like that for relative strength. Now, the big challenge, Z in the Den wanted to know my analysis. If gold takes out 1267.50, the high, this is the continuous contract. So because I'm doing dailies now, I'm going to go to the GCG contract. I want the live contract. That's the contract, the February contract. The gold contract is trading at 1242.90. It needs, and it's making a peak B here because it hasn't taken that 1255.30 from yesterday. Something's going to have to happen over the day for it to do that. So let's just say it makes a peak B. It must hold 1235, which is the 9-period moving average. If it closes under that, if it closes at 1232, there's a little problem here because gold will then be losing the momentum that it's had so far, which has been very, very positive. I want to see by Friday afternoon a close above 1267.50. How does that correlate to the 9-period moving average? It doesn't really, because all I'm asking for there is 1248, maybe 1250. So that's just to get above the 9-period moving average. But I'm saying if it can close above the 1267.50, the high of the week of the 13th of December, not only does it break all the down moves from every single day that has occurred from the 13th, the week of the 13th, it starts to say that the MACD is starting to move up. And remember, I've talked about the flat MACD, which it is. And the flat MACD is saying, yes, you can move higher, but it's unlikely there's a whole new buy signal to buy mode at this particular time based on the way the MACD is acting. A lot has to happen in the stochastic of the weekly chart from 26% right now. It's got to get to 35, 37% by next week sometime. It's running out of time to do that. So here's my assessment. 12, this is the contract itself. This is the February contract. If gold closes under 1232, it's saying, that's a little too much. You want to hold 1235, and within another 2 days, you want to be breaking above the 1250. 5.30 high of yesterday for leg C. That, I think, that's really important. I want speed. I want this kind of formation on the left side, a V-shaped formation there, and I want a V-shaped formation going up. To me, it's imperative. I got to have speed for gold. I like the stair-step move, but it's stair-step. It isn't an H pattern that keeps breaking to slightly lower lows. I want you to be making higher. You remember, there's a very easy formula. Higher highs and higher lows is a buy mode, if it's consistent. Lower lows and lower highs is a sell mode, if that's consistent. So I'm watching this very closely. Very nice action so far since the 1202.30 low, gone all the way to 1255. I'd say that's very good action. The weekly chart is acting nicely, but nice is not good enough. I want to see a fabulous close on Friday. Now, let's just put that together with the dollar, because, you know, sometimes they travel together, sometimes they don't. And the dollar stalled. You see what happens if you use up too much time? It makes it way more difficult to break above. In this case, the dollar continuous contract needs to break above the high of the 8th of November, the week of the 8th, to 81.49 to start a brand new leg B. And that would be an overlapping B if it did. Oh, no. If there's a move from here, well, we'll see. I just want to say that that's the level we're looking at. MACD's good, not great. It should have expanded much bigger. And the stochastic action is very strong. It's at 65. Well, it's not great, but it is strong for the comeback. But I haven't seen the commensurate price movement. That's very disappointing. And the same thing goes to the daily chart. Single leg up A, pulls back too sharp. The dollar is just using up too much time and energy. EUR USD. And here's the same sort of thing. The euro can't get going after its peak top at 1.389 back on the 27th of December. So let's keep that in mind. As far as the gold is concerned, let's also look at silver. I'm going to the G contract. I just don't remember. No, it's SIF 14. Nope, SI, that's the one, but I think I'm going to there. Nope. This H. All right, the H is what's giving me what I want to see. That's the March contract in silver. The weekly chart, you see, this is what I want. Strong leg up. Doesn't get counted as an A. This is the one right here, not there. That is not an A. This is an A. That's an A minus because it went to a lower low. Now, this single leg A up is good because it is taking into account the fact that it's I didn't see that. Oh, it's closing. It's underneath the 9 EMA. Oh, no, silver's doing the same thing, but in a different context. The stochastic is not good. MACD is better. Silver, on the other hand, is really important. The candle that's forming here is going to be absolute. It's going to give us incredible information going into next week if this stays the same. If there's a takeout of the low of this week below 1995, not good at all. I want to see silver close above 20.34. This is the contract, the March contract. The daily chart has made leg B and pulling back from leg B. So far, it's not bad at all for the daily, but it very quickly has to take out the day's high, and that is 20.67. So nice action in both the gold and silver. If I'm looking at weekly charts, the daily charts have so far had much better action. But I would say that if this was a new bull move in gold and silver, they'd be up and away right now. I just think this is a counter-trend rally. So I hope that helps you. Those are the parameters I'm looking at. VNM, I will look for Yarn the Den. VNM. I'll be right back.
Since 1984, Basil Chapman has been using the Chapman Wave methodology to advise traders of his expert market opinion. While originally hand-drawing charts from the late 1970s into the 1980s, Basil noticed that prices under most circumstances virtually always had a certain number of legs to the upside before declining sharply. Later, Basil found that computer software, which included the standard market technical indicators, enhanced the degree of accuracy in calling price turns as well as market trend calls. Thus was born the Chapman Wave sequence. Using the Chapman Wave methodology along with other indicators, Basil Chapman advises his subscribers of his expert market opinion each market day with his opening call newsletter. Right now, you can get a 2-week free trial to the opening call, Basil's daily trading newsletter, by visiting the front page of TFNN.com. Cancel at any time during that trial and pay absolutely nothing. Get your 2-week free trial to Basil's newsletter, The Opening Call, today by visiting TFNN.com.
Tom O'Brien's weekly gold letter, The Gold Report, gives complete and concise coverage of the entire gold market. Inside, you'll get Tom's commentary on gold, the dollar, the rand, the bond, the XAU, the HUI, and detailed coverage of nearly 25 mining stocks. He'll give you the entry price, price target, and stop price of each stock trade. The Gold Report is a long-term newsletter where the focus is on building real wealth through the management of a successful portfolio of gold stocks. With a lifetime of knowledge and almost 12 years of writing his informative weekly newsletter, The Gold Report, Tom O'Brien can provide you with the important market information to help you make better trades in the gold market. Don't let the next bull run in gold pass you by. To get a month-long free trial to The Gold Report, an $85 value, visit the front page of TFNN.com today.
David White's newsletter, The Technology Insider, is focused like a laser on finding the next big things in technology. If you had invested only $10,000 in Microsoft in 1986, you'd have been a millionaire by 2000. Disruptive technology like Microsoft's is the key to these massive long-term profits, and the Tech Insider is the vehicle from TFNN to capitalize on these opportunities. This is the go-to newsletter that identifies, monitors, and profits on mostly little-known cutting-edge companies with great long-term prospects. David's experience is as an inventor of Emmy-winning animation products for TV and Hollywood that propelled a company public. Match that with 14 years as a full-time trader, and he's uniquely qualified to guide you through the light-speed world of ever-evolving high-tech. If you're ready to ride the next big technology bull market for less than $40 per month, log on to TFNN.com and get your 2-week free trial to the Technology Insider. Get in on the ground floor of the next big thing today.
Hi, I'm Steve Rhodes, host of the Money Master Show at TFNN.com. Eastern legend tells of a fair maiden who was offered a rare gift by the king of the land, a bag of pearls. The king promised that she could keep the largest, most perfect pearl she could find with these 3 conditions. 1, choose only 1 pearl. 2, remove 1 pearl at a time, accept or reject it. And 3, if rejected, it would be lost forever. She began by looking at the pearls, passing on many special treasures. She delved deeper into the bag, and soon the pearls were replaced with pebbles. Sadly, she went home empty-handed. Folks, replace pearls with time, because we cannot go back even 2 seconds. We live in the eternal moment of now. So when now are you going to take advantage of my offer to you, a subscription to my daily investment newsletter service, Mastering Probability, where you can experience the most incredible pearls for trading and investing, the Rhodes Momentum Indicator and Strategy. The offer? It gets better. A 30-day money-back guarantee. Don't go home empty-handed. Mastering Probability. Available on the homepage of TFNN.com.
This segment is brought to you by BackTech Environmental. For more information, just click the BackTech banner on the front page of TFNN.com.
Hi, folks. Basil Chapman, and we're back. Just one quick thing. I typed into the den VNM exactly what I was thinking, because we've got caller online. We've got Robert. Hi, Robert. How are you doing? Robert in Chicago.
Hi, Basil. How are you?
I'm very well, thank you. How are things going there?
Chicago's a lot warmer. I mean, last week was really cold, but we're doing okay. How are you feeling?
I'm feeling very good, thank you. And also the weather has turned much warmer. I was out this morning and I said, once we've turned the corner from the first 6 days of January here in Boston, I always feel like, wow, this is now just got to get through the next couple of weeks, because even though we have some snow and some very cold days, the worst part of the coldness, I think, is pretty much done. So should be clear sailing from here right to the spring, right to tennis time. So you'd like to look at
Whole Foods Market, WFM.
Do you have any position at all?
I do not.
Okay. Now, I looked at this when I saw that it was a question, and I had a chuckle because the 120-minute chart has that technique that Garo, who calls from California, loves to look at, and it broke out from the SAR, and it stopped at 5436 area, which is exactly where the resistance is, and it stopped. So 5415, just underneath that. You know, I'm looking at this, and I'm saying to myself, I've got a peak E in Whole Foods markets trading at $53.95 up $1.45. The way it's come down says you could have a bounce, you could even have a bounce towards the 59.60 area, but it looks as if it's had its major move to the upside, and now it needs a period of consolidation with a good chance of coming down towards the 50 to 49 area. That's the big test. That's what I'm looking at in the weekly chart. I have no position in it. I should have had a position short from the very top because I identified this as it was happening right on air. But you know what? Sometimes we look and we think too much and you just don't get to do the trade. Peak D in the weekly chart has this, what I call the Eiffel Tower straight up, kind of straight down pattern. Absolutely important is to hold 51, the round number low of the week of August the 30th. Now, as a bounce, and I don't know if you really want to treat this as a bounce stock. It sounds to me like this is the kind of stock that you would like to buy, not necessarily buy and hold, but you'd like to buy with a chance of buying and holding, as it preferably tries to work its way back to the all-time high in the mid 60s. Is that the question?
That's exactly. If I got back there, I would just sell.
Yeah. So at 53.93, I'm going to make a suggestion, and it's a suggestion because of the rotational aspect of this market. There is a chance, even though I'm looking at so many stocks that are just, if I put it all together, my consensus in fact, last night, the consensus is that the weekly charts are going to be damaged by the daily charts. And yet here we are looking at some of the daily charts being repaired very quickly. So I'm going to make the suggestion, and it's really something you don't even have to jump into. Just think about it. And if you want to do it, there's a reason for doing it. And all I'm going to say is, because there's a chance that you could get yourself at least 2 to 3 points in Whole Foods market, I would suggest nibbling at it here at the 53.97 area. That's on the one side. The other is that if you look at the candles, it's very unusual for this particular stock to have the type of candles, these ugly candles in a row. And there was an ugly candle back in the week of 8th of November, and an ugly candle on the 27th of December, and then an ugly candle last week. And that says to me, I'm just going to say, Robert, hold off for now. I'll probably look at it again in another 2 days' time. Let's give it 2 days. Let's look at it again. I'd rather be buying a stock that is turning than it's just bouncing. And at this point, I'm going to say, hold off. I don't think you're missing anything. Thanks for calling, Robert. Folks, I'll be back tomorrow.
Patterns, profits, and peace of mind.
Are you looking for a precision edge in the market? Something that can stack the odds in your favor? Then look into Larry Pesavento's trading newsletter.
Patterns, profits, and peace of mind.
In each weekly issue, Larry explains what's going to happen in the markets based on the pattern he sees developing and gives you actionable trade ideas based on those patterns. Plus, you'll get his detailed analysis on a variety of markets and sectors, including stocks, treasury bonds, the gold market, oil, the dollar, the Forex market, and more. You'll get access to all the patterns Larry is seeing in the markets, plus the Astro Harmonics and powerful Bradley stock market model that Larry utilizes for less than $5 a day. An extremely potent combination that will give you the edge you've been looking for. Try Patterns, Profits, and Peace of Mind absolutely free for 2 full weeks. That's an $85 value. Yours free when you register right now.
Get Larry's Patterns, Profits, and Peace of Mind.
And get the edge you've been looking for.